Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about the Boeing Company annual report. The Boeing Company offers a diverse range of businesses and services across three main segments: commercial airplanes, defense, space and security, and global services. The company's commercial airplanes segment provides commercial jet aircraft for passenger and cargo requirements. This includes the development, production, and marketing of commercial jets that cater to various needs. In addition to commercial aviation, Boeing also offers defense-related services through its defense, space, and security segment. This segment engages in the research, development, and production of military aircraft and weapons systems, strategic defense and intelligence systems, satellite systems, and space exploration. Boeing's Global Services segment provides a wide range of products and services to both commercial and defense customers. These include supply chain management, logistics, engineering, maintenance and modifications, upgrades and conversions, spare parts, pilot training, technical documents, and data analytics. The company's offerings also extend to satellite systems, strategic missile and defense systems, command and control systems, cyber solutions, intelligence systems, and space exploration. Overall, Boeing provides a comprehensive range of services that cater to various industries and needs. Over the past year, Boeing Co.'s stock price has experienced a significant increase of over 30.79%. This growth can be attributed to several key news events and operational improvements that have boosted investor confidence. One major factor contributing to this growth was the increased demand for Boeing's aircraft. In March 2025, Japan Airlines placed an order for 17 additional Boeing 737-8 jets, which sent a positive signal to investors. Additionally, NASA considered Boeing as an alternative to SpaceX, further contributing to a positive outlook. The approval from the Federal Aviation Administration, FAA, in October 2025 to increase the production rate of the 737 aircraft was another crucial step towards ramping up deliveries and improving financial performance. Boeing's plans to increase the production of its 787 Dreamliner also alleviated concerns about supply chain issues. Furthermore, comments from Boeing's CFO, Jay Malave, in December 2025, forecasting higher deliveries of 737 and 787 jets for 2026 and anticipating a return to positive free cash flow, led to a significant jump in the company's stock price. The strong Q4 2025 earnings report, which included a substantial earnings beat and revenue surpassing expectations, reinforced a positive sentiment regarding the company's turnaround trajectory. Overall, these key news events and operational improvements have contributed to Boeing Co.'s stock price increase of over 30.79% in the past year. The Boeing Company market capitalization of $181 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that the Boeing Company holds a significant advantage in their industry. The Boeing Company trades at a higher price-to-earnings ratio of 93 times and a higher price-to-book ratio of 33.25 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 97% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for Boeing are multifaceted. One key factor is increased production rates in the 737 program, which has led to higher-than-expected sales of commercial aircraft. Additionally, growing demand for global services, particularly in Asia, has contributed significantly to revenue growth. The company's ability to recognize revenue at a point in time also plays a crucial role, with a slight increase from 53% to 55%. Furthermore, funding provided by Boeing to support Spirit's liquidity and capital expenditures has also boosted revenue. On the other hand, several factors have led to revenue decline for Boeing. Higher than anticipated costs due to engineering design changes and increases in supplier costs have had a significant impact on revenue. Additionally, production challenges and certification delays have resulted in higher estimated manufacturing and engineering costs. Uncertainty in production schedules and difficulty in assessing the value of consideration expected to be provided to retain customers have also contributed to revenue decline. In terms of segment performance, Boeing Commercial Airplanes, BCA, has seen significant growth in Asia, with a 57% increase in revenue from 2023 to 2024. In contrast, United States revenue decreased by 63%. The Boeing Defense, Space and Security (BDS) segment has also experienced growth, particularly in non-U.S. customers' revenue, which increased by 26%. Regionally, Asia has been a key driver of revenue growth for both the BCA and BDS segments. However, the United States has seen a decline in BCA revenue, while the BDS segment remains relatively stable. Overall, Boeing's revenue growth is driven by increasing demand for commercial aircraft and global services, particularly in Asia, while revenue decline is attributed to production challenges, certification delays, and higher than anticipated costs. The company's net income and profit margins underwent significant changes between 2023 and 2025. Initially, the company reported a loss of $2,242 million in 2023, which decreased further to minus $11,829 million in 2024. However, in 2025, the company turned its fortunes around and reported a net income of $2,238 million. This improvement can be attributed to various factors. One major reason for this change was the reduction in reach-forward losses on the 777X program. In 2025, these losses decreased from $4,899 to $3,499 compared to the previous year. Additionally, non-recurring losses from long-lived asset impairment and fair value adjustments also contributed to the improvement. Furthermore, a decrease in non-operating pension and post-retirement income due to lower expected return on plan assets and amortization of net actuarial losses/gains helped reduce expenses. The profit margins also showed significant improvement between 2023 and 2025. The company's profit margin decreased from -1% in 2023 to -16.1% in 2024, but then improved to 4.8% in 2025. This increase can be attributed to the reduction in reach-forward losses on the 777X program and non-recurring losses. The decrease in non-operating pension and post-retirement income also contributed to the improvement in profit margins. Overall, the company's net income and profit margins underwent significant changes between 2023 and 2025 due to various factors such as reduction in reach-forward losses on the 777X program, non-recurring losses, and decrease in non-operating pension and post-retirement income. Based on the extracted summary, it is clear that the company has experienced fluctuations in its operating cash flow over the years. In 2023, the company generated positive operating cash flow, with a net cash provided by operating activities of $5.96 billion and $1,065 million respectively. This indicates a strong financial performance during this period. However, in 2024, the company's operating cash flow took a downturn, resulting in negative operating cash flow, with a net cash used by operating activities of -$12.08 billion and -$12,080 million respectively. This significant decline suggests that the company faced some challenges during this year. Fortunately, in 2025, the company's operating cash flow rebounded, generating positive operating cash flow, with various metrics indicating a strong performance, including a net cash provided by operating activities of $1.065 billion and an implied annual operating cash flow of approximately $24 million. The company's debt level has undergone significant changes over the years. Initially, the debt level was at $54.1 billion in 2025, but it increased to $93,102 million by another page. Furthermore, short-term debt saw a substantial rise from $1,000 $8,278 million to $8,461 million in 2025. However, there is also evidence of a reduction in debt level by $3,628. Additionally, total contractual trading commitments decreased from $1,393 to $1,267. In terms of interest expenses, the information provided is inconsistent and not explicitly mentioned on several pages. However, it is reported that interest expenses decreased from $36,035 million to $38,521 million by one page. On another page, interest expenses increased from $2,408 to $2,630, net of amounts capitalized. The performance of Boeing's segments and regions varied significantly in the given period. On a positive note, Global Services, BGS, and Defense, Space and Security, BDS, performed well, with BGS experiencing a substantial increase in earnings from operations in 2025 compared to 2024. BDS also showed improvement, with a significant decrease in loss from operations in 2025. In contrast, Commercial Airplanes, BCA, faced challenges, including the impact of the 737-9 door plug accident and subsequent production slowdown. This led to an increase in loss from operations in 2024 compared to 2023. Defense, Space, and Security was also disrupted by work stoppages in St. Louis operations due to contract negotiations. Geographically, Asia and Europe were the top-performing regions, with significant increases in earnings from operations in 2025. In contrast, the Middle East and Africa performed poorly, with decreases in earnings from operations in 2025 compared to previous years. Overall, Boeing's performance was mixed, with some segments and regions showing improvement while others faced challenges. Boeing's management outlook and strategy management at Boeing is expressing uncertainty about the company's future prospects due to various factors. One major concern is the risk of losses on fixed-price contracts, which can be affected by operational and technical complexities. Additionally, there is a possibility of additional material earnings charges, termination provisions, order cancellations, or other financially significant exposure on certain contracts. To mitigate these risks, Boeing has implemented an investment strategy that focuses on liability matching and asset class diversification to manage various types of risk. The company also plans to reduce its workforce through involuntary terminations by the first half of 2025. Furthermore, management is prioritizing retention and incentivization of key personnel, as evident from the granting of premium-priced stock options to executive officers. Despite these efforts, there are still areas where management could provide more clarity on Boeing's outlook and strategy. Specifically, there is no explicit discussion of the company's plans for 2026, and significant uncertainty remains regarding when backlog will convert into revenue. Overall, it appears that Boeing is focused on managing risk and uncertainty, while also prioritizing key personnel retention. The acquisitions made by the company include the purchase of Spirit AeroSystems Holdings, Inc., for a total value of $4.7 billion. This acquisition was made through an exchange of Boeing shares for all outstanding shares of Spirit. The deal also included the assumption of Spirit's outstanding debt and other obligations. Furthermore, the acquisition encompasses various aspects of Spirit's operations, including its commercial, defense, and aftermarket businesses, as well as portions of its operations in Belfast, Ireland. In contrast to acquisitions, the company has made divestitures by selling off certain business units. One notable example is the Digital Aviation Solutions business, which was sold for $10.55 billion through an all-cash transaction. This move indicates that the company is strategically focusing on specific areas of its operations while shedding non-core assets. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out $331 million in 2025, with a declared amount of $86 per share in December 2025 that was paid out in January 2026. In addition to paying dividends, the company has also engaged in share buyback activities. Specifically, it issued shares from its treasury stock on two separate occasions: 22,977,008 shares on December 8, 2025, and 129,375,000 shares on October 30, 2024. There are significant concerns about inventory buildup or supply chain disruption in the aerospace industry. Multiple factors contribute to these risks, including dependence on suppliers and subcontractors. Page 4. Commercial airlines risks and potential delivery delays. Page 6. Slowed production rates and supply chain constraints. Page 8. And cybersecurity compliance requirements. Page 9. These concerns are further exacerbated by global supply chain constraints, labor instability, raw materials availability, single-source supply issues, and work stoppages. The Boeing Company is particularly vulnerable to these risks due to its complex supply chain. The company's reliance on suppliers' data, information systems, or networks also poses a significant threat. Page 15. Additionally, the uncertainty surrounding U.S. government funding and potential reductions in backlog and order cancellations. Page 31, adds to the concerns about inventory buildup. The impact of tariffs and export restrictions is another major concern for Boeing's supply chain stability. Page 32. The company's delivery delays and production disruptions may lead to reductions in backlog and order cancellations, further exacerbating the risk of inventory buildup. Page 37. Certification processes for new aircraft models, such as the 737-7 and 737-10, also pose a threat to supply chain stability. Page 42. The Boeing Company's commercial airplane programs are particularly vulnerable to supply chain disruptions due to slowed or paused production, supply chain constraints, and work stoppages. Pages 48-49. The company's significant inventory procurement contracts with determinable prices and quantities, as well as long-term delivery timeframes, also contribute to the risk of inventory buildup. Page 51. In conclusion, the aerospace industry is facing significant concerns about inventory buildup or supply chain disruption. Multiple factors contribute to these risks, including dependence on suppliers, commercial airlines risks, slowed production rates, cybersecurity compliance requirements, and global supply chain constraints. The Boeing Company's complex supply chain makes it particularly vulnerable to these risks, which could have a material impact on the company's financial performance. That concludes the financial summary for the Boeing Company. Feel free to comment below, and I will be happy to answer them when possible.